Welcome back everyone to the Audacious Witch channel, where we talk about the magic behind the stock market. The S&P 500 is hitting new all-time highs. The Nasdaq is basically a vertical line. Everyone is celebrating. The Fed is finally going to cut rates. US and China are playing nice. And AI, it's literally printing money. Right? But I'm not celebrating. I'm actually getting super nervous because right now I see two incredibly deadly scenarios brewing underneath all this hype. Two things that aren't just a dip, but a fundamental system-wide threat that could bring this entire AI-driven market boom to a complete shuddering stop. Two deadly scenarios that can put an end to this overhyped AI market where the zombie companies never die. Scenario number one, the circular deal bubble. We're talking about a circular debt bubble and a single, inescapable geopolitical choke point that you're not hearing about on the news. By the end of this video, you'll know exactly what those two red flags are, why companies like Amazon are cutting 30,000 jobs, showing off how investments in robots and AI could help drive down cost, boosting sales without the need for as many human workers, and why that's a big fat lie they want you to believe. Without further ado, let's talk about the first scenario. I call it the circular AI deal bubble. It looks like a Ponzi scheme, but only if you look closely. You know the big AI deals, right? In September of 2025, OpenAI signed a massive $300 billion deal with Oracle. Oracle stock instantly jumps 50%. Oracle then takes this bump in valuation to buy a mountain of Nvidia hardware. That sends Nvidia soaring now to over $200 a share, close to a $5 trillion market cap. Then October 6th, AMD signed a deal with OpenAI willing to sell 10% of AMD to OpenAI just to ride the hype train of AMD stock going up to print money for OpenAI. OpenAI, which is unprofitable, by the way. The circular nature of these investments, first gigawatt of Nvidia systems will be deployed in the second half of 2026 on Nvidia's Vera Rubin platform. AMD and OpenAI, where they're going to deploy 6 gigawatt of AMD GPUs. The first gigawatt deployment of AMD is set to begin in the second half of 2026, right after OpenAI gets the money from Nvidia. It's all in plain sight. It's a closed-loop system. It's like everyone is giving each other money and hoping the resulting stock bump justifies the whole thing. Is there any risk to all of this? But here's the problem. Is there any real value underneath all this swirling money? According to a recent MIT study, 95% of corporate investments in generative AI have so far produced zero return on investment. Zero. Think about that. The Nasdaq 100 has more than doubled since ChatGPT came out. But if 95% of the real-world use case has no return on investment, this whole frenzy is being fueled by hype and debt. Google has accumulated $10 billion in debt in 2025. Microsoft's debt is up from $27 billion to $46 billion. Meta, $28 billion since 2022. Meta is literally out of cash right now on the balance sheet. And Oracle, an AI darling now, is carrying close to $90 billion in debt. They are borrowing money to spend on AI that is producing zero return. Just in 2025, U.S. tech firms have issued about $157 billion in debt, which is 70% increase compared to last year. According to JP Morgan, AI-related debt now accounts for 14% of the total corporate debt market. If you know anything about how debt works, you'll know that this is money that needs to be paid back with interest. So in other words, companies that are borrowing to spend on AI need AI to produce a return on investment to justify the debt that they have taken on. And today the reality is that the short-term return on investment of AI is extremely questionable. That, my friends, is a recipe for defaults and financial pain when that debt comes due. Scenario number 2, the single point of failure. Deep dive. Okay, let's move to the second and arguably more dangerous scenario. It's the single point of failure. Right now, as the Fed is cutting rates, money from money market funds on the sidelines, passive funds have been flooding money into these companies, pushing up their stock prices and their valuations. 7 stocks account for over 33% of the entire S&P 500. It's a house of cards, and the foundation of that house is Nvidia. Nvidia is a $4.9 trillion company accounting for over 7% of the S&P 500 by itself. Everyone wants their H100 and B200 chips, but here is the critical fact that most people miss. Nvidia is not a chip maker. They are a chip designer. Their value is in the blueprints, the intellectual property, and their software platform that power the AI factories worldwide. But this is a big but. Who actually manufactures 80 to 90% of the world's most advanced chips, including almost all Nvidia's? TSMC, Taiwan Semiconductor Manufacturing Company, just one company, and most of their production is in Taiwan. This is the choke point. All of the world's most desired chips, the very fuel for this $4.9 trillion AI boom, are all made by one company in one location with massive geopolitical risk. U.S. intelligence believes the Chinese president is preparing to invade Taiwan by no later than 2027. Now, I'm not a warmonger, but I am a smart investor. TSMC has admitted that moving their fabs out of Taiwan would basically be impossible, and under Chinese occupation, they would not be able to continue producing chips for the West. Imagine that scenario. The entire AI infrastructure gone, choked off, overnight. That is a market crash that makes 2008 look like a little puddle. This probably won't happen because now I put this scenario clearly in the open. So what's the more likely path? The big tech AI layoff efficiency lie, the deception. Let's talk about the big lie they're selling us to keep the hype going, the AI efficiency narrative. Amazon CEO Andy Jassy has been on a years-long campaign to cut expenses as the company ramped up spending on AI amid increased competition for its cloud computing business. As we roll out more generative AI and agents, it should change the way our work is done, he said. It's hard to know exactly where this nets out over time, but in the next few years, we expect that this will reduce our total corporate workforce. Large employers are trimming the number of knowledge workers they employ. With Meta, UPS, Molson, Coors, Booz Allen, and Charter Communications all announcing layoffs in recent weeks, more big companies are also betting they can grow without hiring. JP Morgan CFO told investors recently that the bank now has a very strong bias against having the reflective response to hire more people. Aerospace and defense company RTX boasted last week that its sales rose even without adding employees. Goldman Sachs sent a memo to staffers this month saying the firm will constrain headcount growth through the end of the year and reduce roles that could be more efficient with AI. Walmart, the nation's largest private employer, has said it plans to keep its headcount roughly flat over the next 3 years, even as its sales grow. They say AI agents are so efficient, they're replacing human workers. We see Amazon, a $2 trillion company, reliant on this AI narrative, cutting up to 30,000 corporate jobs. They say the goal is to do more with less. thanks to AI. But then you look at the U.S. Citizenship and Immigration Services data in 2025 alone, Amazon received approval for over 10,000 H-1B visas. Amazon Web Services alone, their cloud division, needed over 2,000 developer visas. Besties, this is not me being anti-immigration at all. But if AI is so good it's replacing coders and corporate workers, why do you need to bring in 10,000 plus new workers? This is the corporate exploitation playbook. Lay off expensive American workers while simultaneously bringing in cheaper, highly skilled foreign labor whose employment is tied to their visa. Some say that Amazon will be 100% AI by 2030. Every factory worker gone, every driver replaced. The same Amazon that just got approved for a total of 12,391 visas, but keep in mind, this is the guy that needs his AI investments to blast off to the moon. Think about that. If AI is so good that it's replacing human coders, then why does Amazon Web Services need over 2,000 visas to bring workers into the US? If AI agents are handling everything, why do they need over 10,000 visas just in 2025? They're trying to say that AI is replacing all jobs, but that's an oversimplified narrative. The AI efficiency narrative is being used as a cover for complex and controversial business practices. Then we have Qualcomm joining the AI chip party at last. This pool party has become so crowded. So many hosts like OpenAI, Nvidia, AMD giving each other money, and people just throw borrowed money at them like it's free money. Nvidia is already facing multiple competitive challenges. Broadcom said last month it expects clients to make more use of its hardware in the future at the expense of Nvidia's GPUs. Tech and AI are essentially deflationary as they cut jobs to AI agents as companies lay off American employees. More and more Americans are going to be unemployed. And unemployed people can't contribute to economic growth. The unemployment rate will rise as the government declares a recession. The Federal Reserve is going to cut rates when this overhyped market finally rolls over and unemployment rises from the layoffs we're already seeing. But that rate cut meant to save the market will be the final push that pops the AI debt bubble.